Hello again, everyone. Welcome to Cotton Grower Magazine's Cotton Companion Podcast. This is Jim Stedman, editor of Cotton Grower. I'm joined again today by my good friend and colleague, Beck Barnes. Beck, it's good to have you back after our last episode.
Yeah, it's good to be back, man. Although I will say, just for full transparency, I was traveling for work the last time Jim was recording a couple of weeks ago, and I was up at a conference in Kansas City, and my phone started buzzing mid-morning. I guess it was Wednesday, and I had like multiple farmers texting me as soon as that episode dropped, wanting to know where they could find this report that Jay Mahaffey had put together, which was what the last episode was about, and just saying glowing things about the podcast that week. And it's like, it's hard not to read too much into how many people were complimenting the episode that I did not appear on. A little might have hurt my feelings a little bit, but you just got to smile through it. But so anyhow, I'm back. So I apologize, everyone. I'm back.
Well, I know obviously it's obvious that you were missed. Then the people, I think people were just calling to check on you to make sure you were at this point, because I know what it's like to get stuck in those conference meetings and in places like Kansas City.
Honestly, I welcomed the text messages. I needed something to keep my attention.
Well, obviously we were pleased with Jay's input last episode, but today we're going to shift gears again. Because we've always heard there are two things that farmers in general, it doesn't matter if they're cotton farmers or not, that they watch every day, and that's weather and market prices. And right now, as seeds going into the ground, that is especially true. Now, since the start of the year, the Cotton Belt has welcomed some really good moisture over most of the key production areas, and that really helped tamp down the drought index in some of our states. Cotton prices started the year strong. We got up close within sight of $1. But now as planting begins and it's underway pretty much everywhere, those prices have tracked back down into the high 70s and low 80s. And obviously the big question for us in this market right now is why? And that's why it's time we're going to welcome back our friend, Dr. O.A. Cleveland, Professor Emeritus of Agricultural Economics at Mississippi State University, to help answer some of those questions, maybe offer some predictions and advice to help growers maneuver through their upcoming market decisions. He's going to be with us in just a few minutes, so please be sure to stick around.
Yeah, Jim. But first, our sponsoring partner, the American Cotton Shippers Association, has a brief message that they'd like to share.
The American Cotton Shippers Association, also known as ACSA, is a trade association primarily made up of cotton merchants founded in 1924. ACSA members manage the majority of the world's cotton trade, providing services of merchandising, delivery logistics, and risk management to their customers. ACSA is proud to be celebrating its 100th anniversary this year. Join them in Scottsdale, Arizona in June 2024 for their centennial celebration event.
All right, as always, a giant thank you to our friends at ACSA for that message and for their support. Now, let's take a look, Jim, at the most current USDA crop progress numbers. That's right, I'm going to step into your lane and deliver the crop progress this week.
Go for it, man.
See how well I can do it. So for the week ending May 5, as we mentioned, that planting was already underway all across the Cotton Belt, and the most recent report shows that 24% of this year's crop is now in the ground, and that's trending 4 points ahead of the 5-year average and a 9-point jump just in the past week. So planting is now reported in all cotton-producing states. I believe that's all 17 cotton-producing states.
Correct.
With all but Kansas and Oklahoma reporting double-digit state percentages. So 2024 obviously getting off to a quick start, with the bulk of the planting season coming up over the next few weeks as we record here on May 7.
Yeah, it's, I think there's just a general amount of, the general feel of early season excitement, and the fact that there's moisture out there. Soil temperatures are pretty favorable everywhere. So there's, no reason to hold back.
Yeah, it's a fun time of year, honestly. I like
this is the optimistic time of year.
There you go.
Yeah. Well, and there's one other item of interest we want to talk about real quick for the industry. For those people who are looking to serve the industry in a different from a different perspective, USDA is seeking nominations of domestic cotton producers from Arizona, Georgia, and Texas, and also importers of cotton and cotton products that contain cotton to fill 7 member and 7 alternate positions on the Cotton Board. USDA will appoint members and alternates to serve 3-year terms, and those terms will begin January 1st, 2025 and run through December 31st, 2027. Now, certified producer organizations and certified importer organizations are planning to hold caucuses to nominate 2 qualified persons for each open position in their respective industry segment. Now, those caucuses are scheduled in Arizona on Thursday, June 27th at 10 a.m., in Georgia on Monday, July 15th at 3 p.m., and in Texas on Thursday, July 25th at 11 a.m. And all of these times that I've mentioned are local times for each area. There's also an importers caucus that is scheduled for Tuesday, July 9th at 10 a.m. Now, if you're interested, nominating and caucus information is available. You can contact the AMS Cotton Research and Promotion staff at area code 540-361-2726 or via email at cottonrp@usda.gov. Again, that's cotton, the letters RP at usda.gov. And if you really want to go through a little bit more detail on this and see the numbers in front of you, please check out the details. We have an article about this up on our cottongrower.com pages right now.
So, all right. Well, now it is our great pleasure to welcome our good friend, Dr. O.A. Cleveland, once again. He is the Professor Emeritus of Agricultural Economics at Mississippi State University. And yeah, man, we're happy to welcome back to the Cotton Companion. If y'all follow us, you know that we like to platform OA as often as we can, whether it's in person or online or on the podcast. So OA, we want to thank you for joining us today. How are you and how are we feeling about this cotton market?
Well, doing great, and thank you. It's always a pleasure to be here. I always, at this times like this, I want to feel a little bit more optimistic about cotton, but we've got a tough road to hoe here in the next 6 months. We'll just have to kind of wait and see what we get. The most immediate need is going to be that Memorial Day rain out in West Texas.
Yeah, it's funny. People were making fun of me yesterday because I mentioned that one of my hobbies is following the online rain gauge that the Lubbock Airport posts every other day. And they say, wow, what an exciting life you must live, Beck. But if you would, OA, and we're going to get into this in this interview, but we've had a little bit of a roller coaster here since the start of 2024. Could you give us and give our audience, just kind of as a table setter, can you give us a quick recap of this market ride we've seen over the past couple of months?
Wow, and it has been one, as you've talked about and we've discussed in the past. The market was somewhat bearish as we moved out of January, and we began to note actually as early as November that USDA was not adjusting the crop size compared to what the Agricultural Marketing Service, AMS, classing offices were telling us, and with respect to what merchants and just private industry people were telling us. And the December, the January, the February crop reports, they just did not adjust cotton. We fussed a lot about that, but decided just to give up. And then all of a sudden, I guess it was in the February report, they finally made major changes to the crop. Well, this is well after the crop's been harvested, and at that particular time, I don't believe there were but 14 gens operating in the entire United States. So we were fussing about, you should have better data by now. But and I think they did. They were just not simply reporting it. And as we should, and as we do, we take USDA's word. We take USDA's data as the absolute. The market does, and that's good for the market to have that check, to have that accuracy. That oftentimes they say it's the Bible of data. But anyway, that data was very late being corrected and brought up to speed. And all of a sudden in February, the USDA begins to make this major change and prices just began to skyrocket. The world then recognized that the U.S. carryover was in fact going to be significantly lower than what other prognosticators were saying. And that sent the market on a rally. We rallied as much as 15 cents, a significant rally. And as the prices rose higher and higher, we also began to note that there was basically very little international trade in U.S. cotton. We were not selling cotton around the globe. So once the market had seen those adjusted numbers with a smaller carryover, it had brought in a spectacularly large number of speculators, and they were piling on the market. And bottom line, the specs drove the market higher. Lots of times we fuss about specs. Specs gave us this rally in cooperation with the new USDA data. But we probably went at least of the 15-cent rally, we probably went to 12, 13 cents too high, but that's okay. We gave growers an excellent opportunity to price cotton. Many of them did. But then we began to realize that international trade was not occurring. Really the only cotton that's been moving in any volume has been the West African and Australian, Brazilian. Not a lot of Australian left, but Brazilian cotton, if that was available. And that was moving, and that was taking market share from the United States, and continues to do so today. But once the market realized and had embedded in it that we were suffering from a demand standpoint as much as we had been concerned about, specs began to unload, began taking profits, and as they took their profits, as the short sellers got out, as the longs got out, sold their position, got short to take their profits, it just built on itself, and that building of selling just took the market down day after day after day. So here we are, down some. We went up 15 cents. We're down, say, maybe 20 cents from those highs. The rough numbers, we could fine tune that some, but roughly that much. And the market is under so much pressure now because it's the reality. They're only about roughly 6 weeks, slightly less, before we have first notice day on the July contract, and we're beginning to see that we have a fair amount of certificated stocks, and once again, that demand is simply not there. We're going to have even at 2.5 million bale carryover, which is historically low, but compared to our export sales, it's not particularly low. It's not high by any stretch of the imagination, but the market is comfortable trading 75 to 80 cents. And I don't think we're going to move much beyond that time, that price area.
Yeah. Well, I mean, I can't believe I'm going to ask this, but we saw that the speculators were driving the market early, and then now seems like our driver is back down to fundamentals, and we're watching the weather as we should. And man, what's it going to take to bring those speculators back into the cotton market?
Exactly. Well, that rain gauge at the Lubbock Airport is going to be terrifically important. We've got pretty decent range compared to the past 2 years out in West Texas. Now, the rolling plains have had some excellent moisture. We always want more there. Drop down to South Texas here on the second week in May. Looking at the situation, you would say, oh, it's a record crop. Well, it is for this time of the year, but it looked like a record crop this time last year too. But that's what it looks like today. And they have been getting the rains, even some that they did not get last year. So South Texas well on its way. And there are more than a few fields out there that really won't need hardly any more moisture at all. They will welcome it, but they probably don't need much if it got down, push came to shove. But and moving back up to the rolling plains, they've had some pretty good moisture. The big 1N, one north and 1S regions of Texas, West Texas, some of that's rolling plains, bulk of it's high plains. They have had, as I said, good moisture, but they need more moisture. Some very large acreages still have not received, I would say by and large, they have enough moisture to germinate. Certainly some growers will say they don't, but in that regard, it's spotty. But they will need that Memorial Day rain, that $1 million rain that we always say that they get. And for some years they miss that. But they've got a window of opportunity for moisture for, this is still not quite mid-May. They've got another 4 weeks probably. They can go to mid-June. We like to say they can't go past June 1, but they can go to mid-June if they get the big rains that historically they tend to get as a goodbye wave to the moisture season. So the key to the market as we move from here forward, certainly a new crop we're speaking of, the key is going to be what we get, what kind of moisture Mother Nature gives to West Texas and the Southern Plains area. And not as much acreage. That's really part of the rolling plains. They've had excellent moisture, good moisture up into Kansas, but it's still that far West Texas that still needs more moisture. That particular area is going to determine where December goes. We're on the cusp of December moving lower, if in fact that we get some excellent rains. But it can move back into the 80s from the 75-cent level it is now to move into the very low 80s based on how much rain it doesn't get. Or it does, yeah, I'm sorry, that it does not get. If it gets the good moisture we would like to have the crops that we would like, then I'm very suspicious of breaking the 72-cent level, and hopefully not, but breaking the 70 level. I honestly will admit to you that I thought last year we were through with cotton prices in the 60s. That had been written off. We had graduated. We had matured. But no, we're facing that again. The real culprit, the main culprit is cotton consumption. We have just been beat to death by synthetic fibers. We now, our cotton consumption is probably down around 18% of the spinning system. And we had fought a hard and long fight to keep it up around 30%, but we've just been somewhat massacred there the last 15 years.
Yeah. Excuse me. Now, I look at the USDA numbers, for this week from Crop Progress, and it's showing we're 24% planted already for cotton this year, which is running a little bit ahead of schedule in most cases. And you look at the states, I think there's only 2 states that are in single digits in terms of cotton planting at this point. And that's Kansas and Oklahoma, as you would expect, I think, right now. And, I've talked to growers, I talked to consultants, and everybody's just kind of feeling like, we can't wait. We're going to go ahead and move and get this crop in the ground and see what happens. Even in West Texas, it looks like they're going to try to go out a little bit early while they feel like they've got some adequate moisture on it. So I guess from that perspective, it's, that's some good news on it. But, the flip side of it, of course, is the market prices. And I know too often we tend to look at the market impact on this industry. But, quite honestly, news in other parts of the world really isn't that rosy either, right?
Exactly. That is correct. In general, that's the case. Australia has a crop coming. The Brazilians by and large have a good crop coming on, but China is off to its typically disastrous beginning. But they always seem to come around. But India is going to increase their acreage, which is a bit of a problem. The early material I'm seeing on the monsoon is they expect an excellent monsoon, what I'm seeing anyway. But yes, there are some problems. West Texas is going to dominate the next 2 months of trading because New York is going to follow West Texas as opposed to China, as opposed to India, as opposed to Pakistan. Now, 2 months out, we'll pay a lot more attention to the foreign crop, as well as the U.S., but not a lot of attention to the foreign crop right now.
Okay. Now, obviously, we also watch in every month or so and see what the Feds are going to do right now with interest rates, trying to manage inflation. And I've got air quotes going here with manage inflation as best they can. How are they going to continue to manage these rates in the short term? And when do you think demand for cotton, what's it going to take for demand for cotton to start to improve?
Well, I would say, the biggest problem we have right now. The consumer, whether he's buying cotton goods or synthetic goods or whatever, the consumer right now just doesn't have the cash that they are willing to spend on apparel of any type. We see that this department store has increased sales. This group has increased sales, but you break the data down, and it's truly not apparel sales, and it's certainly not cotton sales. So until the consumer feels comfortable and has more, and not discretionary income, but I'm going to use the word discretionary income, and I'll try to explain it. Until the consumer has more discretionary income, we're not going to see our demand balloon begin to float higher. Now, discretionary income is usually thought of as the funds that we use for rent, food, energy, clothing, school, and all these sorts of things. But I've broken it out now and saying that energy, housing, food, with the prices that they are now, that's no longer discretionary. That's fixed outlays we have. We have to do that because our funds are so tight. So that leaves very little consumer spending for apparel goods, for cotton goods, for, as Cotton Incorporated taught us the message, cotton rich goods. Mm-hmm. And it was about a year ago, I said that we would see an increase in demand come March of 24. And then I began to see interest rates and inflation just stay up there. And I said, no, I'm going to have to go out to December of 24 or at the earliest. And now I'm probably out to March of 25. I don't see any relief coming in inflation. And consequently, I don't see any relief coming in interest rates. We've inflated basically food and energy and whatnot over 20% or right at 20% in the last 3 to 4 years. But somebody, my senator from Mississippi, your senator from Tennessee, the senator from New York and Massachusetts and California, they're going to have to understand that we're spending the people's money that the people don't have. And until we do that, inflation's not going anywhere, but it's going to stay at 3, 4, 5%. And we'll keep interest rates at 5%. 5% interest rate is not bad. Now, you grew up, I grew up, first house I bought was 7.5% interest rate, and I didn't think it was that bad of a deal. What the people today, for the last 20 years or 25 years, we've had such low interest rates, we think 5% is high. Well, I say 5, that's 5.25, but the mortgage rate's about 8%. So we're really nowhere any further along than we were in the late 1970s. We're so much like, our economy today is so much like that of the late 1960s, and that spells trouble. So I do not see any cotton demand showing up. I'll finally get to your answer. I do not see any significant cotton demand until we get most likely March, April, May, a year from now. We've got to get into 2025. I think there will be once the consumer, once the Fed, once the government communicates to the people that and shows with hard data that the economy is truly improving, I think there will be highly significant pent-up cotton demand that will take this market higher. But I don't see it. Drop dead earliest would be January, February of 25.
Okay.
And I think they'll be that early. Thank you. Go ahead. I'm sorry.
That's just fine. Now last week in your article, you mentioned that growers should basically get ready to dig their heels in, start getting ready to price this year's crop late in the marketing year, simply because of demand and the price situation and everything. What should growers be thinking about doing as they're putting the crop in the ground right now, and what triggers do they need to be looking for through this season in order to to take action?
Well, I know inputs are high. I probably don't have the same emotion that the grower has with paying for those inputs, but I do know they're high. But given where prices are, I think this is going to be just another year where production yield is going to be extremely important. They're going to have to get the yield because prices are so low. So I think they do have to go out with the inputs to try to maximize that yield, to use that worn out expression. And I think they have to think in terms of pricing out is probably no earlier than March, and probably with the May and July of 2025 futures contracts. I just think they have to do that. I have kicked myself repeatedly the last month for not verbally suggesting puts or hedges at 85 cents. Well, I did say 85 cents, but we only touched that briefly one day. So I can't say that counts. If it stayed around a week or two, I'd say I told you so, but only one day doesn't cut it. I should have lowered my price target to 84 cents or even 83 cents. I dug my heels in with emotion and made the mistake of not pricing any new crop cotton at 84 cents, 82 cents. So I think now we have to think in terms that, as you said, that we're going to have to price late, because if we do get the rains in West Texas, and I hope we do, because those people need a crop, and the world will need cotton, but it's going to keep prices low going into Christmas and January of 2025.
Okay. Well, we're sitting here, early May. USDA is going to publish its May supply demand report later this week. Last month, it was pretty neutral. There was just not a whole lot of excitement surrounding it. Any predictions on what we might see this month?
Well, this is the new world. This report is. This is May. And every May, USDA forecast for the following year. Mm-hmm. So we will see cursory comments made to the 23-24 marketing year, but they will concentrate most all of their comments on 24-25, and world demand moving out to August or end of July 2025. So we're really looking into the future, and that's what those numbers coming out this week we'll look at. So it's tough to do that, but I guess we get paid to do that. So I would anticipate that we'll see about a 5 to 7 increase in world production. I think we'll get it up in the neighborhood of about 120 million bales, maybe 119 on the low side. The U.S. crop will come in probably around 16.5, maybe as high as 17 million bales. I don't quite see it at 17 until we do see more moisture in West Texas. But the exports will continue to be a yoke around the cotton's neck. Exports this year, 12.5 million bales. I don't see any improvement coming for the 24-25. So another year of exports around 12.5 million bales. Domestic consumption of 1.5 million bales. So 14 million bale offtake is about as high as I can go. So I think we're going to increase our U.S. carryout about 2 million bales. I would anticipate that we would increase world carryover about 3 to 3.5 million bales. So that just digs us in a little bit deeper to have to fight new crop prices in the. I'll say I'm throwing in the towel to the high 60s. I'm going to hang with 70 cents, but we have to be very nervous about seeing some 60-cent cotton.
Yeah.
What we also have to see is that so much of the cotton in the Mid-South, we've gotten to a point that we've got to have 1,200 pounds per acre. There are a few that can still exist on less than 1,200 pounds per acre, and that's just phenomenal. For an old guy that a bale and a quarter used to be all you really needed. Well, all of a sudden we had to have a bale and a half, and we didn't think we'd ever get that high, but we did. And now then, but we get 1,200 pounds for most of the Mid-South and the Southeast. The Southeast can go with a little bit less than that. Production costs are creeping up on the plains of Texas, so that even their yields are going to have to be a bit more sustainable in the future.
Well, it's as we always say, it's every year. I think we say this every year. This is such an interesting and unpredictable market, even though we try to predict it. Inevitably we're wrong somewhere along the way.
Well, that may be why I don't get paid much anymore. Get a check from Cotton Grower, but I hadn't in probably about 20 years since you took over, or since Beck took over. But no, it's wonderful. Sometimes we think, oh, it's going to be so easy. It was just like this. I remember this year, that year. Oh, it was so easy. Cotton I've become an old guy in the business now. I understand that. And we truly can say it is so different every year. It is so.
Yeah, you get to the point where you think you have seen it all, and you really haven't. There's always a surprise there somewhere.
Right. One comment before we go. Looking at the market, we as the market went higher and higher, we began getting certificated stocks brought to the board. Certificated stocks being that cotton that can be delivered against the futures contract. So merchants see the prices were terribly high. They noticed that they couldn't sell the cotton to the mill. No mills didn't want it, so they brought it to the board to certificate it. We went from about roughly 2,000 bales of certificated stocks to nearly 150,000 bales. We've had 40,000, again, round numbers, delivered against the May contract. So that's still available to be delivered against the July contract. I'm sure some of that will be so, but not much. There could still be some fireworks in July, but I do not anticipate it at all. I think we're stuck with July being 3 cents trading around 76 cents, maybe 77 cents. I think we're stuck with December being 2 to 3 cents, around 75 cents.
All right.
For the next 45, 60 days.
Okay.
Thank you.
Well, OA, thank you as always for taking time to join us today. You've always got good information and insight that our listeners at this point may or may not love to hear, but we need to share it anyway. The market is what the market is right now, and we appreciate it. Appreciate your time, appreciate you, and we'll be catching up with you again soon.
It's my great pleasure. My good health to y'all. My great pleasure. Thank you so much. I appreciate it.
Thank you.
Bye-bye.
All right. Well, that's it for this episode of the Cotton Companion podcast. We want to say thank you again to our dear friend, Dr. O.A. Cleveland, for joining us on today's discussion. And we want to say thanks also to the American Cotton Shippers Association for their continued participation and sponsorship with the Cotton Companion. And as always, we want to say thank you, dear listener, for joining us. We hope that you've enjoyed this episode. And if you did like what you've heard, please be sure to spread the word and tell your farming friends about the Cotton Companion podcast. Here's where and how they can find us.
You can find the Cotton Companion in 3 easy ways. First, go to cottongrower.com/companion, or simply click the podcast tab at the top of the homepage. Second, subscribe to our channel on iTunes or wherever you find your podcasts these days. And 3, Sign up for our weekly e-newsletter, the Cotton Grower e-News, that's delivered to your email inbox every Tuesday morning. You can do that by going to cottongrower.com/subscribe. Also, be sure to follow Cotton Grower on social media. We are at Cotton Grower Mag on Twitter. And on Facebook, you'll find us by searching for Cotton Grower Magazine.
The Cotton Companion podcast is produced twice monthly by Tyler Hatch and Kim Henderson, our talented colleagues at the world headquarters for Meister Media Worldwide in lovely Willoughby, Ohio. I'm Jim Stedman, he's Beck Barnes, and we'll be back with you in a few weeks with the next episode of The Cotton Companion. Until then, get those planters rolling and stay safe.
Yeah, he works and he works and he works and he works all day. God made a farmer. Yeah, he works and he works and he works and he works and he works all day. God made a farmer. Yeah, God bless the farmer.